3-minute trader tip. 2 primary challenges in stop loss placement. Number 1 challenge is, do we use a system or a manual stop loss? By a system stop loss, we mean one that's actually placed on this system, which means you're essentially saying that your trade will be closed if there is a price touch of that level at any time. So if we have a stop loss at $10, for example, we may come down and trigger that, even if it's only for a second. Or of course, if there's an open below, if there's a gapping in the market. The alternative is to not place a stop on the system, but we still identify a potential stop level. Some experienced traders prefer this and manually close the position price below the stop level. So what route should you take? There are significant risks to the latter approach. You've got to be incredibly disciplined and believe, created by evidence, in this approach. So you've got to show evidence that you're actually able to do this in the heat of the market when it's the right time to do it. The other thing, of course, is it requires a close and almost constant monitoring of positions, as any significant market event can result in a share price movement or price of any asset class that may have a major impact on capital. Of course, we can predict this to some degree because we can know with some certainty at what times economic data is due to come out. But it's those other events, some political events, perhaps conflict or terrorist events, that can move the markets very, very quickly without any predetermined time. This is why you need to constantly monitor positions. So ask yourself this: which should you take in light of your risk profile? Number 2 challenge, of course, is where do I place my stop loss? There are many methods used by traders, including a previous key level, for example, the next support, below entry, or a multiple of an average true range, for example, 1.5 ATR for the chosen time frame and instrument that you're actually using. And you've got to plant your flag in one method. Make sure you trade it religiously and, of course, measure it. Through this, you can obviously determine whether it needs to tweak or whether it needs to change completely in terms of the method you're using. That is only possible, of course, if you have a clear, unambiguous statement to optimize consistency in action and give you the ability to evaluate how well it's doing. So, for example, an anytime touch of a 1.5 times ATR below entry signal level is a clear and unambiguous statement that could be written in a trading plan. Your challenge now is to decide whether you're going to use a system or a manual stop placement and what you're going to plant your flag in terms of how you're going to do it. Trade safe, and we'll see you again soon. Bye-bye for now.